Good afternoon and welcome to Biztech's Asian Midday Market Watch, powered by Rajhi Bank Malaysia. Our guest today is David Kuo, founder of the Smart Investor out of Singapore, but he's coming out of London this early morning in London at 6 o'clock. Welcome to the show, David. Thanks for doing the show.
You're welcome, Brian. So I should say Salamat Pagi rather than Salamat Tengah Hari. It's afternoon where you are. It's actually at 6 a.m. in the morning here in London.
Now, how's the weather been so far?
The weather has been fine. What really amazing me is the number of people out in the streets and the restaurants. I went out for dinner last night. Everywhere was packed. The West End has never been as busy as it has since the pandemic. So very encouraging for the UK consumer.
Now, I'm going to come back to you on that because we are going to be talking about the Eurozone and the risk at the Eurozone. But before we get your insights, let's take a look first at crypto markets. Bitcoin is at 23,098. It's up 9.38%. Ethereum is at 1,635.2. It's up a whopping 14.03%. Now, looking across the regional stock markets, Thailand's stock market is closed today for a holiday, but we've got the Straits Times Index, which is up 0.17%. Bursa Malaysia is up 0.83%. Shanghai is up 0.53%. The ASX All Ordinaries is up 1.06%. The Nikkei is up 0.25%. The Hang Seng bucks the trend. It's down 0.31%. And the Kospi rounds up the numbers, being up 0.7%. David, overall, markets look good. Tell us why.
Well, they do look good, but they don't look as good as I would have liked them to have looked. I mean, following the Federal Reserve's decision on the interest rates, I would have thought that they would be far more buoyant than they are. But maybe they're just showing us a little sign of caution, and they're not taking everything that Powell said at face value, and they're taking it with a huge pinch of salt at the moment. So they're not entirely convinced that the Federal Reserve has inflation under control, and maybe interest rates will have to go up far more aggressively than Jerome Powell has said.
Okay, so just to recap, the Federal Reserve raised interest rates by 75 basis points, and also Federal Chair Jerome Powell guided that the central bank's next move may be perhaps to slow down the pace of increases. So this is what David is referring to. And well, as you said, the market is telling itself to be convinced that that's what he says is actually what he means. But then I know the jury's still out.
You're right, Brian. I mean, he's speaking from both sides of his mouth at the same time. What you say is correct. What he said is that the Federal Reserve might be prepared to slow down the rate of increase in interest rates in monetary tightening. But he didn't say that he was going to stop increasing interest rates. And the other thing he also said was that everything would be data dependent. And so he's covering himself by saying that he will look at the data. But which data is he going to be looking at? Is he going to be looking at the inflation rate, or is he going to be looking at the unemployment numbers, and is he going to be looking at the economic growth numbers? And I think he will always be guided by the inflation rate. And what I worry about is that there is no Federal Reserve meeting next month, Brian. And so the next one after this won't be until September. So 0.75%, unless he does an out-of-cycle interest rate increase, we're going to get 0.75% now, missing out August, and no increase until September. And there's going to be a lot of data coming out over those 2 months. And let's just hope that inflation doesn't take off too badly, because otherwise 0.75% this time will not have been enough.
Now, David, staying on the US, I want to talk about tech company earnings. What's your view on the earnings reporting so far?
I think it's pretty much as predicted. There has definitely been some kind of slowdown from many of the tech companies. So we saw results from Microsoft. We saw them from Alphabet, which is the owner of Google. And they're more or less saying the same thing, that the economies are starting to slow. And because these are American companies, the high US dollar is also affecting their profits and their sales, because when they convert them back into US dollars, their foreign sales don't seem to be as good. So these two companies, even though the results weren't that great, they weren't that bad at the same time. The one that is a bit worrying, of course, is Facebook, now called Meta. What they did warn was that advertising revenue is slowing. And that really is what you would also expect as the economy starts to slow. Companies start to reduce the amount of advertising spend that they have. And I think we have to separate out Facebook from companies like Google. We have to separate it out from companies like Microsoft as well, because Facebook has a different problem. It is really competing with many players out there for the advertising spend. They have Instagram, sure, but they also have to sort of look over their shoulders and say, what is TikTok doing? What is Reddit doing? What is Snap doing? Because, I mean, these companies are also fighting for that share of advertising spend. And so it is not really that surprising that many of these tech companies are cutting costs. They are reducing headcount. They're not hiring as many people as they would like. And they know that this economic downturn that we're entering is going to be very long and very painful, and they need to conserve as much cash as possible if they want to survive, Brian.
So, David, now speaking of long and painful, the signs are all there, and where you're at the Eurozone, and concerns around growth and contraction in some markets. Maybe you could give us some insights into some of the risk factors that are now prevailing in the Eurozone.
I think it's inflation, and I think it is what the next step from the central banks are going to be, Brian. I was reading an article from an economist, very well-known economist called Nouriel Roubini, and he is not called
Mr. Doom.
Dr. Doom.
Yes.
He is not called Dr. Doom for nothing. I mean, he is actually sort of very worried about what is going on in many of these economies around the world. And he is saying that they will not be able to come and save their economies this time, simply because the amount of debt to economic growth that these economies have is so high. He quoted an average figure of around 400% debt to GDP for some economies. And so what he's really telling these economies to do is, look, you've got to hunker down, and you've got to be prepared to accept the fact that you have to increase interest rates, and you are going to have to accept the fact that there is going to be economic contraction. I'll tell you one thing, Brian. I was reading a profit warning from a Hong Kong developer called Wharf Holdings. It is one of the biggest property developers in Hong Kong. It's not a mainland developer, but a very old and tested developer in Hong Kong itself. And it has warned that profits for the first 6 months of this year is going to be 100% less than the profits from this time last year. In other words, it's saying that it's going to make no profits for the first 6 months of 2022. And the reason is because it has to write down the value of the assets that it already owns. In other words, the property assets that it has is worth less now than it was a year ago. It doesn't mean that the company's going to go bankrupt. Far from it. I mean, operationally, it's fine. But it's just that the assets on its books are now worth a lot less than a year ago. And if this is happening in Hong Kong, I would say that many other economies around the world and also consumers need to watch out, because if they think that they are living in a $1 million or $2 million condo, or they have a property that they think is worth X amount, that X amount may not be what it is actually worth if they were to get it revalued today. Now,
again, that's a separate conversation that we could have for another half an hour. But David, thank you very much for coming on the show early in the morning from the UK, and thanks for your insights.
You're welcome. Thank you, Brian.
We've been speaking to David Kuo, founder of the Smart Investor out of Singapore, on Biztech's Asian Midday Market Watch, powered by Rajhi Bank, Malaysia. I'm Brian Fernandez. This video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. Please like and subscribe to our various platforms. Thanks again for tuning in.